Hello and welcome to LOLC Securities Weekly Market Roundup. I am Tharadu Amarasekara.
And I am Megara Vijaymanna. This is the sound of profitability. Foreign investors bought a net $3 million worth of Sri Lankan government securities in the week ending of July 2nd. This was according to central bank data. And this was after the rupee currency recovered after a 4-year near low hit in May. The rupee currency selling rate fell to as low as 354 against the US dollar on the 21st of May before recovering and gaining to the 330 level. This week, it appreciated to the 330 level according to central bank data. The rupee had been steady for more than 3 years before the latest depreciation, with the central bank citing it to higher oil and vehicle imports amid a lingering conflict in the Middle East. The rupee has fallen by 7.7% through July 2nd this year. A net 1,001 million rupees, which is $3 million at $1 equivalent to 330 rupees, was sold to foreigners in the week. Despite the latest weekly inflow, Sri Lanka has suffered a total net outflow of around $13.7 million so far this year amid sharp rupee volatility in the last 2 months.
Sri Lanka's much-awaited $3.5 billion global destination branding campaign is set to be launched towards end of this year or early 2027. Meanwhile, interim-specific markets will be focused on different campaigns starting from next month.
Sri Lanka Tourism Promotion Bureau Chairman Buddhika Hewawasam described the initiative as a major milestone in repositioning Sri Lanka in the global tourism marketplace. He said the campaign is strategically designed to help the country achieve its long-term goal of attracting 5 million tourist arrivals and generating $8 billion in tourism earnings by 2030. It was also revealed that the LTPB is receiving technical assistance from the World Bank to implement the global branding campaign, acknowledging that the Bureau staff lacks prior experience in executing a campaign of such international scale.
The IMF held a special discussion with the officials of the State Revenue Administration Reform and Modernization Department at the President's office and held a special review process on revenue reforms. The meeting, chaired by Secretary to the President Nandika Sanath Kumanayaka at the Presidential Secretariat, reviewed reforms implemented over the past year under Sri Lanka's medium-term revenue strategy, including changes to tax administration, customs procedures, excise operations, and the broader public revenue framework. During the discussions, the IMF delegation also met separately with senior officials from the Inland Revenue Department, the Ministry of Finance, Sri Lanka Customs, and the Department of Excise. The IMF reviewed progress on digital transformation projects, data integration, leadership and human resource development, and strategies to broaden Sri Lanka's tax base. It also recognized the RARMB as a reform hub with a strong governance framework. The IMF agreed to continue providing technical assistance and advisory support for reforms being implemented at the IRD, Sri Lanka Customs, and the Department of Excise. According to the President's Media Division, tax compliance under the IRD has increased from around 40 to 45% to 70 to 75% following the department's restructuring into medium corporate, metro and regional offices. And now it's time for the corporate highlights.
The Hambantota International Port recorded its strongest ever performance in the history in the month of June 2026. This includes record-breaking figures in both roll-on, roll-off operations and also the container operations.
The port handled 90,219 vehicles and 80,325 20-foot equivalent units TEUs during the month, Hambantota International Port Group said. Shipping lines seeking alternative networks shifted cargo to the southern Sri Lankan port, which sits 10 nautical miles off the main east-west sea lane. The June milestone follows expansion at the facility. In 2025, Hambantota International Port's total cargo throughput rose 175% year-on-year to 8.24 million metric tons. Container volumes grew to 428,000 TEUs in 2025, up from 53,169 TEUs in 2024. The port's container segment has seen consecutive volume spikes this year. In April 2026, the port recorded its highest single vessel container throughput, handling 13,260 TEUs on the MSC Marie Leslie.
Investors from the UAE are topping the foreign investor list in Port City Colombo, accounting to 19%. UAE is the leading investor, with Singapore, China and the UK contributing 13% each, followed by the US at 10% and Australia at 9%.
Construction of the 50 megawatt Mana wind farm is progressing rapidly, marking a significant milestone in Sri Lanka's efforts towards moving and transitioning to clean energy while also reducing the electricity costs.
According to the ministry, the first shipment of wind turbines required for the project arrived a few weeks ago, while the remaining equipment has now reached the port of Trincomalee. Unloading operations are currently underway. The project is expected to play a significant role in expanding Sri Lanka's renewable energy capacity and increasing the share of renewable energy in the national power grid. It is also expected to contribute towards the country's goal of achieving net zero carbon emissions by 2050. The ministry noted that electricity generated by the plant will be purchased at a rate of USD 0.0465, approximately Rs 14.37 per unit, the lowest recorded tariff for wind-generated electricity in Sri Lanka.
Here's Megara with the international highlight of the week.
The Asian Development Bank has lowered its growth forecast for developing Asia and Pacific economies to 4.9% in 2026 compared to 5.5% in 2025. This is a reduction of 0.2 percentage points from April projections. Prolonged disruptions to energy markets caused by the Middle East conflict have weighed more heavily on the region's prospects than anticipated. The 2027 growth forecast is maintained at 5.1%, reflecting recovering activity as these pressures ease. With impacts extending beyond energy to fertilizers, other commodity prices, and supply chains, inflationary pressures are likely to persist. Regional inflation is now forecasted at 4.3% this year compared to 3% in 2025, which is an upward revision of 0.7 percentage points from April. The inflation forecast for 2027 remains at 3.4%.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will see you in a brand new week.